I've talked about this a lot. If you can simplify everything at this point in the cycle, it's about the dollar. When the dollar weakens, liquidity conditions will increase and the world will be a better place and your bags will go up. Whatever bags you hold, literally anything. And so what we are doing is repeating the Trump cycle from 2017. Trump came in, the dollar had been going up, everyone was freaking out about tariffs, they're inflationary, rates have been going up. Trump comes in, says, I want a weaker dollar, and rates went down all the way through, even though the Fed were raising rates. We're seeing the same thing today. It's mirroring it. The dollar will weaken.
In this explosive interview, Raoul Pal lays out its macro framework for Bitcoin's future, breaking down how global liquidity cycles, central bank policies, and economic trends are shaping the next bull run. He explains why a weaker dollar, rising global liquidity, and institutional adoption could send Bitcoin to unprecedented levels, following a pattern similar to past market cycles. Raoul also explores how the Federal Reserve, China, and the broader economy influence Bitcoin's price action, and why the current phase of the business cycle is setting up perfectly for massive growth in risk assets. Stick around until the end to hear Raoul's Bitcoin price projections, insights into institutional adoption, and why this bull cycle could be bigger than anyone expects. Also guys, if you like our cryptocurrency content, please remember to like and subscribe to stay up to date. Now, over to Raoul.
It's very important the dollar weakens because the dollar is the liquidity provision for the entire system. And it's the dollar that drives global M2 that you guys know about. Sorry, I'm just going to pour myself a fresh glass. Feel free to pour yourselves a glass while you're going through this, because there's quite a few charts to get through, and they're important. There's nothing like a glass of champagne to focus one's mind. Okay, so global M2 is following the exact pattern. And I've gone through these charts before, but you guys have memories of a goldfish, or you just panic and forget everything I've ever told you. So I'm trying to anchor you on some understanding, which is a tough ask, frankly, but I'm doing my best. And Julian went through these as well. So it's not like the first time you've seen them, but you'll act like it is. And you're like, oh my God, that's amazing. And I've showed you these charts like 16 times before. Global M2, last time, this time, same pattern. That is the same pattern as the dollar. It should all play out the same way. Global M2 is a good proxy for global liquidity, which means number go up. The other thing that people get very confused about is they're like, well, what happens if the Fed don't cut much more? I don't care. What happens if rates don't go down a lot? I don't care. What happens if they don't drain the Treasury General account? I don't care. You've got to understand the global picture is the big picture. And the global picture, like 2017, will most likely be driven by China. I think the US will stimulate, but China is the big one. Chinese bond yields are now at 1% or somewhere close to it. They have run out of runway. And what does running out of runway? Jay Powell told you today, running out of runway, i.e. no rates to cut, means QE, baby, and more cowbell. The Chinese have I think when I looked at the calculation in my Excel, I think I got to, they need a fuck ton of QE to do. So yeah, I think the calculation was a fuck ton. They have to print money like crazy. Why? They have an aging population, massive debts. They need to service their debts. Everybody's in the same boat. This, my friends, is the everything code. I've bleated on forever about it. You kind of half get it. It's the fact that the only way of servicing the debts is to debase the currency, and the Chinese will do a lot of debasing. However, they can't do it until Trump beats them over the head with the strong dollar, which is happening today, and saying, you will agree our tariffs, which is happening right now. And when they agree the tariffs, he will say, I'll give you the carrot after the stick. The carrot is a weaker dollar. He did that in 2017. He will do it again now. The weaker dollar plus the lack of spending from Doge, i.e. the lowering of spending, will mean that rates come down as well. And what we get is the banana zone, the next phase. It is all to play for. There is nothing else going on. There is nothing to panic about. There is nothing wrong. It is all a piece of beauty. Global M2, every time we get to this point. It comes, it breaks out, it retests, it goes higher. We're exactly at the right point where this should happen again. Next phase, global M2 going up, the weaker dollar. There's global M2 and Bitcoin. Oh my God, I hear you say, because I hear you all the time. Oh my God, oh my God, oh my God. Panic, panic, panic. Is it going to 70,000? Are we all going to die? What am I going to do? No, no, no. In 2017, it went down 28% in 5 days, and then it kind of sideways chopped and then rallied. It will decouple from this chart going forwards from here. That I will give a high probability, 70% probability. The low is in, it will decouple, and eventually it will go. The next phase will be alt season. I hear all of the bullshit on Twitter. Alt season is cancelled. There's too many tokens. It's never going to happen. Everything's changed. The ETF, and la, 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 la. Not true. It will happen. It may not take your bags higher, but that's because you're a shitty asset allocator and you need to do better job. So, we've all got our failures. I mean, I've got a few things in my wallet that are down enormously, and I pretend that I don't see them because they're only in my small bag, which was like less than 5% in mine, so I don't really care. Global M2 versus Bitcoin. Every time it breaks out, Bitcoin breaks higher, obviously. So we've talked about that before. We've done that chart. We're on that chart. The business cycle is picking up. New orders are screaming higher. The business cycle is the driver of global earnings. Global earnings get recycled into risk. Recycling into risk means risk assets like small cap stocks, through to commodities, through to alts in crypto go higher. The business cycle has only just started. A number above 50 for the ISM is expansion of the business cycle. We've just had our first print since God knows when of this going on the upside through 50. Last time was 2020. So we've got the cycle to play out. We are nowhere near the peak in the cycle, which I'll come to in a sec. New orders, less inventories. This is a 3-month lead, screaming even higher. The business cycle is going to pick up fast. And financial conditions, the dollar, oil, rates, they say, well, it should go to at least 55.6, but that would be low for the ISM because guess what? We think the dollar goes lower, rates go lower, and oil goes lower. So that should push this up into the 60s, which extends the cycle further. So we're at least 9 months away from a cycle peak. So it is very interesting where we are. It is all very positive. When we look at the overbought, oversold indicator of where we are in the cycle with crypto, we're nowhere near overbought. We're just starting. Bitcoin, every time the ISM peaks, Bitcoin peaks. When the ISM breaks 50, Bitcoin accelerates. We are at the acceleration phase, not the peaking phase. Anybody who tells you otherwise is a fucking moron. So we're at the acceleration phase. We've got liquidity coming. The ISM is not going to peak until the end of the year, maybe even into 2026. There is nothing, literally nothing to concern yourself. Here's the ISM and a kind of detrended, some fancy thing that Julian does with this. Gives you a pricing model of Bitcoin. I mean, if the ISM goes up to 60, where it should be going, I mean, we're talking Bitcoin in the 250, 350, whatever thousand level. We ain't even started. Oh, and altcoins will outperform Bitcoin. Here's altcoins percentage of total market cap. Now, I've shown you this chart maybe 58 billion times, and you forget it every time. I don't know what drugs you guys are taking, but maybe a little less, so to increase your memory bandwidth would be somewhat helpful to me because it's tiring to show you the same chart and you forget it every second. So what we have here is altcoins as a percentage of Bitcoin total market cap. As ISM goes up, people go out the risk curve. Sorry, speaking with a mouth full. That is not actually very civilized. I get it. I'll probably start vaping later and you can insult me for that as well. Chorizo is so good. Goes so well with champagne. So basically, we've just crossed 50 in the ISM. That doesn't mean instant alt season right now. Give me my alts. Where's banana zone? Banana zone's not happening. The banana zone's failed. You've slipped on the banana skin. Shut the fuck up. It takes time. It'll all play out. As the ISM accelerates, altcoins will accelerate.
Raoul Pal debunks fears of runaway inflation, arguing that data shows inflation is declining, not rising. He highlights wage growth slowing, housing prices dragging down CPI, and key indicators signaling lower inflation ahead, not a repeat of the 1970s. He then shifts to Bitcoin's current cycle, explaining that we are nowhere near the top and that the macro setup remains extremely bullish. Comparing it to previous cycles, he emphasizes that liquidity is just starting to return, financial conditions are easing, and historical patterns suggest a much stronger bull run than most expect. Raoul also discusses altcoin season, predicting that as Bitcoin stabilizes, ETH, Solana, and other assets will outperform. He humorously suggests that even Dogecoin could shock everyone, citing its historic 500% outperformance against Bitcoin. Ultimately, he believes the current cycle mirrors previous Trump-era market conditions, setting up a massive opportunity for Bitcoin and risk assets moving forward.
So, inflation, that's the other thing. Oh my God, inflation's coming back. It's going to be the 70s again. I know, I hear these narratives from you guys because I see it all over Twitter. I see you messaging me on the Real Vision platform. I see you talking to each other on the Real Vision platform. And I just hear these voices. I'm like, where are you getting this from? I don't understand. You're listening to some random crappy macro guys never run a portfolio telling you something. And you're like, see, he said it. Inflation's coming back. We're all going to lose money. I get it. We've all got our net worth in this entire fucking trade. And we want it to work. Please, 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 just focus. So, wages. Wage tracker growth going lower. Therefore, we will not see wages increasing for a while, if at all, depending whether AI breaks it entirely. Ain't concerned about that. Oh, home prices. Well, home prices are a massive drag because there's a 17-month lead. So home prices will be bringing down CPI shelter, which is the largest part of CPI. If the largest part of core CPI is shelter, it ain't going up. When rates go down, guess what? Owner equivalence rents come down, and that drags down CPI. Look at the Cleveland New Tenant Rent Index, 3-quarter lead. It's puking. It's gone below zero. There is no inflation, my friends. Let's take away shelter and look at all items less shelter, because shelter's the lagging one, 1.9%. I mean, really, dudes? And then we'd use the Mount Fuji chart of truth that Julian and I have been using forever. Like, we take all the inflation episodes, the major inflation episodes, compare them to this one, and guess what? Inflation's coming lower. So we will get cyclical inflation later in the thing. There's nothing structural. We're not going back to the 1970s. None of that's going to happen. Literally none of that's going to happen. Tariffs are not inflationary. It wasn't inflationary last time. It won't be this time. None of that's going to happen. It'll just be a pretty ordinary cycle. So that tells me dips are for buying. The cycle top. Again, all the fucking noise on X. The cycle top is the top. Is it topped early? Oh my God, it's the worst. I'm so scared. I'm so scared. We're nowhere near. The core risk indicator. Are we overbought? No, nowhere near. Bitcoin valuation model. Are we overvalued? No, nowhere near. Let's have a look at it versus the 2017 cycle. Are we near the top? No, nowhere fucking near. Are we going to follow this exactly? No. Are we going to do decently based on this? I think so. I think it's going to rhyme more than people expect, and we will have a stronger cycle than people expect. The Nasdaq, for those of you who still bother to trade equities, which I know some of you did, it's following the same pattern. It's all like a rerun of the previous Trump. Because he's got the same policies, basically, apart from with the new tech stimulus. So let's go back. Again, Julian talked about this in his presentation, but I want to hammer it home and hammer it home to you. You guys all have PTSD from the last cycle. It finished early. Is it going to happen again? Am I going to lose my money? And am I going to round triple my gains? Will I die? Will I have to drink Bud Light for the rest of my life? Or can I drink champagne? All of these stories. Blah, 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 blah. The orange zone market goes higher, right? But it didn't really in 2021. Well, what happened in 2021? Oh, the ISM peaked. Do you remember? Raoul told you a minute ago, when the ISM peaks is when you need to be worried. Oh yes, the ISM peaked in March 2020, 2021. Previously, it peaked in January, February 2018. Guess what? That's when ETH peaked. Also 2013. It works every time. And where are we now? Oh, we're at the bottom of the ISM. Oh, how silly of me to be worried about the about the market peaking. For fuck's sake, people. And so, I don't even know what this chart is. Oh yeah, from the halving. We've only done, is it from the halving or from the low? We've only done an 8x from the low. We did an 85x and a 46x. We only started. Liquidity, as I said, peaked in March 2021. We're now negative currently by this measure of liquidity. If I use the global M2, we're just positive, but we're nowhere near there to be a liquidity peak. As we said, the ISM peaked March 2021. So let's look at it. That was what was happening in March 2021. Look at that. Financial conditions were falling. And the ISM, well, it had peaked at over 60. And let's look at the current one now. You ready, kids? The opposite. It's bottoming. And the green, the financial conditions index, will be going the other way. And the last time it did this, it went up a lot, blah, blah, blah. This is the chart. Again, everyone's like, where's my banana zone? It's failed. It's like the banana zone is a period of time and a price action that is nuanced because it goes in bursts and then corrections. So the banana zone started from September onwards last year. The market came up and did what it did every single time. The correction after banana zone phase 1. So correction phase. Then banana zone phase 2 kicks in and it goes fucking la. It goes bananas. Then guess what? Correction phase 2 fits in. And then we go to the final blow off top. And you've got to be embarrassed. You've got to be embarrassed from all of your complaining when you look at that chart. And look at how small that squiggle is for the correction phase. You've got to be embarrassed. Oh no, I forgot. You bought AI tokens and they've gone down 90%. I did try to tell you. I gave you the don't fuck this up thesis. If you could follow it, don't use leverage. Generally have 90% of your portfolio in the top 5 cryptocurrencies of your choice. You're generally fine. You're generally fine. Don't FOMO. Don't do stupid shit. Don't get hacked. Store your stuff carefully. And you'll be fine. But no, most people didn't. So let's give a few charts to love because we're kind of going into Valentine's Day. I'll talk about Valentine's Day in a bit. But there are some charts to love. When you step back and stop all of the noise, there's the Bitcoin chart. It broke out of a wedge. It's been slip sliding down the little slope of that wedge, unwinding its overbought, ready for the phase 2 of the banana zone. ETH. That weekly ETH chart is a killer chart. That's a beautiful pattern. I don't know, you've all given up on ETH. ETH's never going to go up again. It's terrible. It's the worst thing ever. The ETH community and Vitalik save us. Just shut up. It'll be fine. Will it outperform Solana? No. Will it do very well? I'm sure it will. ETH to me, overscale. How are we doing? We're about half a bottle in. As you can tell, the swearing and the general insulting is increasing. I apologize for that. I'm actually a nice person. I try to be. Okay, so generally, I think they've overbuilt block space. That's the basic problem with the layer 2s. and crushing of the fees. But once the financial system builds on ETH, I think we'll be fine. So I think the financial system will build on ETH like they use Microsoft. Right, we don't really have a choice. It's the most Lindy, it's the most secure, got the most devs, it's the most understood. ETH Bitcoin cross. I know I've tried this many times, but I honestly believe that this is either a wedge or a sideways consolidation, and it will be fine. Alt season is generally ETH over Bitcoin. If altcoin season is starting, Bitcoin dominance should fall, ETH should rise against Bitcoin. And again, I'm kind of not worried. Solana versus the US dollar, broke out the wedge, retest, up, new high, back down, all fine. Bit of a sloppy chart pattern, but in the bigger picture, it's a killer. I mean, look at that. Cup and handle, test the highs, next breakthrough, this will be the move through 1,000. Simple as that. Solana looks beautiful. Solana versus ETH should keep outperforming ETH. So that's the risk curve I've talked about. ETH outperforms Bitcoin. Solana outperforms ETH. And then we go to Sol Bitcoin. That should break higher too. That will be the next leg, which will be alt season. And then we've got SUI, which is the stronger token, earlier, slightly riskier. SUI, and again, just because you guys are going to snapshot this and he's pumping his own bags. Yes, I am. I'm on the foundation, but actually, the majority of my crypto, liquid crypto, is in SUI now. And I'm looking for the fucking switch to go 100%, which I don't recommend for most people. I don't. And it scares the shit out of the SUI board when I tell them that, because then it's all their fault and I can blame them. And that's not with any inside information, honestly. I'm telling you, it's nothing. It's because of this fucking chart. So it's a beautiful inverse head and shoulders base, retested the base. I did a big amount of switching. I will do more. And I think that it should outperform over time. So I'm just trying to bet on the fastest horse. I'm just a profit maxi, trying to create the most wealth I can for myself and family and everybody else. Deep book, the liquidity layer to SUI. I've talked about this before. It's been a recommendation. It has done very well. It's like SUI beta. And it looks again like it's forming a wedge. Another beautiful chart. Deep book versus SUI seems to be doing the same kind of thing. That looks great. Doge, the king of all cryptocurrencies. And I'll come on to this point in a sec. That chart is killer. These are altcoin seasons. This is the risk curve. Doge is such a beautiful chart every time. And here's the money shot. The greatest chart of all time. And maybe the most hilarious chart of all time. Is that Doge has outperformed Bitcoin by 500% since inception. And if we break from here higher versus Bitcoin, Doge will be the hardest money on the galaxy. And Bitcoin will not be. And I think that would be the most hilarious outcome in all of crypto, that Doge ends up being the hardest money ever created. And I'm rooting for that. I'm going to have some Doge. I just think it would be fucking hilarious. I can't believe what the Bitcoin maxis will say when you just say, well, yeah, the Dogecoin standard, that's what it's all about. And we'll have new kind of Dogecoin maxis who are bullying everybody else on Twitter because they didn't see the Dogecoin standard. So that's what I'm looking at there. So
Raoul Pal makes it clear. Bitcoin is still in the early stages of this bull run, and the macro environment continues to support explosive growth. He emphasizes that inflation fears are overblown, liquidity is increasing, and the conditions are aligning for Bitcoin and risk assets to thrive. Looking ahead, Raoul predicts that altcoins will soon begin their outperformance cycle, following Bitcoin's lead. With history as a guide, he believes this cycle mirrors previous bull markets, presenting one of the biggest opportunities in financial history. Thanks for watching, and if you enjoyed this video, please remember to like, subscribe, and share your thoughts in the comments section below.